I want to get straight to the slight move we saw in U.S. 10-year yield, touching 2.75, the highest level since 2014. How surprised were you by certain elements of the latest FOMC statement?
Not very much. I would say that the FOMC meeting was broadly in line with what the market expected. I think there were some signals that the Fed might be considering more hikes than what the market is expecting, and the market is focusing on the addition of the word further, which seems to signal a number of hikes this year. My interpretation of what the FOMC did was that this is broadly in line with what the market. Stepping back a bit, I think for this year, the Fed, in my opinion, will be challenged to hike more than 2 or 3 times if we don't have the inflationary expectation go back on track. I think the story has been that the Fed is normalizing and there's no need for us to be in emergency policy setting, so to speak, given that the economic growth is back on track, although it's still relatively low, but it's solid enough to normalize. I think as we'll move towards the 2.5% range, keeping in mind that the natural rate is about 2.5%, the Fed will be challenged to hike if there are no justification in terms of inflation going higher.
In terms of, let me jump in here. In terms of the timing, we've put out on a chart the current expectations for what might or might not happen in March. Then you're seeing traders boosting the wagers that they're going to be raising those rates at the next meeting. The highest it's pretty much been all the way back to Feb. The question becomes is how confident are you that inflation is going to pick up? Do you agree with the slightly more aggressive wording from the Fed this time around?
Well, I would say, I would put it this way. I think for the first time pretty much since the end of the financial crisis in 2008, 2009, we have a number of factors which are conducive to seeing an increase in terms of inflation and inflationary expectations. Whether it's base effects, whether it's the synchronized economic recovery that we're seeing, whether it's the increase in terms of the commodity prices. The question is how high inflation will go and how strong those inflationary expectations will be. And my sense at this point is that we will not see a spike in inflation. We'll see a bit of a gradual shift in terms of inflationary expectations towards the target that the Fed has, so towards about 2%. Does that justify going towards the natural rate? This is the question mark, which, in my opinion, I still think that the Fed will be challenged to hike much further if we don't really have the inflation justifying that.